It's time for stock picks. Today we are looking at the major players in South Africa's telco sector, Telkom, Vodacom and MTN. Joining us to analyze these stocks is Roy Mutooni from Sanlam Investments. Roy, thanks again for joining us. Today, Telco's in focus
Always a pleasure.
Telco's in focus as mentioned, and let's start off with Telkom. I think we spoke about it when I had you on Stockwatch a few weeks ago. The turnaround efforts seem to be bearing fruit, selling those non-core assets, and that data-centric strategy also a key driver. Are you positive about that growth story moving forward?
Yeah, absolutely. I think when we reviewed the results, the recent results, there's a couple of things that became very clear. First of all, their ability to generate free cash flow was significantly greater than anybody on the market had seen before. And we really quizzed management about how sustainable this is and where it was going to go. And I came out feeling relatively confident that over the short to medium term, you should continue to see free cash flow generation somewhere in the region of about 3 billion, give or take, per year. We previously thought it would only be about 1 to 1.5 billion, but this is a business that seems to have found its stride. It's hit its stride really well and will continue to generate cash. So this turnaround is for real. Remember, the big thing is that they got rid of SwiftNet, which allowed them to pay down a lot of their historical debt. So they've got a clean balance sheet, strong cash generation, and they're demonstrating this by resuming dividends and actually paying a special dividend as we speak.
Would you say that Telkom is undervalued at, 46, 47 Rand?
I think so. I think if you look at it from a free cash flow basis, which is how I think these capital intensive businesses need to be looked at, it's probably trading at about a 12, maybe a 13% free cash flow yield. For a business such as this, it probably should trade closer to an 8, 9 or 10, which means there's upside. Because remember, it's free cash flow over the share price. If the share price goes up, the free cash flow yield comes down. So I think there's still greater value. I think the market wants to see sustained execution from management. So you're not going to see dramatic moves. You're going to see moves around results, around announcements and that sort of thing. But I think the momentum is definitely there, and I think management understands the pressure that is on them now.
A cheaper entry point into that telcos industry, because looking at their peers, they priced quite expensively compared to Telkom. Let's take a look at your second stock pick, which is MTN, more of an African player than Telkom. And over the years, it's been hit by conflict. We have now conflict also escalating in the Middle East. It's also been hit by hyperinflation as well as currency devaluations. Things, however, are looking up. Just looking at the first quarter performance, big improvement from FY24.
So I think the way to think about MTN, yes, it is a multinational, yes, it is about the Africa story, but 80% of its earnings come from 4 countries.
Okay.
So South Africa, Uganda, Ghana, and Nigeria. That's 80% of earnings, and everything else falls within that 20%. So if you're happy about the 80%, then it is unlikely that 20% would bring it down. And when you look across those, in Nigeria, they're number one by far, strongest investor, and Nigeria has gone through a process where prices have been increased. They've renegotiated their lease agreements. So it looks like a business that's nicely positioned for medium-term growth, well above averages. Ghana, they're dominant completely, both in data and in voice. They probably have 70, 80% of the market there, and that's a market that's growing. In Uganda as well, smaller market, but consistent generator. Mobile money is very good for them. There it has generated a lot of earnings. And I think across all of these, what you're seeing is the currency volatility of the past has probably gone away. We've had significant currency devaluations in the past year across most of Africa, and I think that has reset currencies to more reasonable levels. The one big market they're struggling in is South Africa. It's big. But this is also where the competitive pressure is greatest, like we saw from Telkom, and as we'll speak later on, from Vodacom as well. But it's not that it's contracting here aggressively. I think they're holding their own just not growing. Service revenue growth in the low single digits, whereas in those other markets, the service revenue growth is well ahead of inflation and well in the double digits.
And talking about the SA market in particular, I see they're also struggling to crack the market when it comes to their fintech products as well. Talk to me about that.
So fintech in SA has always been a difficult market. It's bank dominated. Most people are banked. Most people have bank accounts. So it's very difficult to introduce these alternative ways of paying for services.
Yeah.
We had Vodacom try M-Pesa previously. These guys are trying Momo. You can see some of these things catching traction, but it will never be as significant as an M-Pesa in a place like Kenya. Nevertheless, both MTN and Vodacom are making a good go at ensuring that their ex-mobile businesses, which is predominantly these e-commerce, fintech, and the like, start growing their contribution to earnings because they're higher returning.
Yeah.
It's still early. I think the right business model still needs to be found. But yes, it's because the banks, I think, clean out on that sector completely.
All right, and let's look at Vodacom from that aspect as well. You know, I found it so interesting at some point when I was trying to buy airtime, and there were offerings for loans even from Vodacom. Talk to me about just, you know, the fintech penetration and the evolution from just being a mobile operator to providing data, to getting into assets, fiber assets, to even, you know, starting to become more of a fintech player.
So absolutely. You remember the basis of all of this is the networks. And for a long time, Vodacom had the most comprehensive and best network. So what they needed to do was leverage into these other things. And that's why they went to the one app strategy. So previously they had VodaPay and the Vodacom app. They put those together so you get special offers from going onto the VodaPay and using it from there. And I think these ex-mobile businesses now contribute something like 20 to 22% of earnings, which is significant and which is significant progress. And it shows that they're really trying to see how they can diversify their business while sweating the asset a whole lot more, the asset being the network. They've gone into e-commerce. They've done a lot of things on the enterprise side. And like I said, the app strategy still continues. It's still small. It's still not clear which is going to win or which one's going to become more dominant, but they're definitely having a good go at it.
And, you know, with Vodacom, when you think about the counter over the last, year or so, what comes up is that massive deal, Roy. Do you think that will go through? You just answered right on the go.
So if you think about it, I think it's very important that infrastructure providers don't duplicate infrastructure the way we saw it being duplicated during the mobile era, where you had three big networks, and you'll see them right now, all in the same place, duplicated rather than people sharing and being more capital efficient. And I think that's the driver of that massive deal. It will happen in some way, shape, or form. If the competition authorities believe that this is an abuse of dominance, them coming in, I think what you'll find is that Vodacom will find some way of doing it. MTN will find another way of investing, but I don't think you're going to see another big fiber rollout by either Vodacom or by MTN to the scale that OpenServe has. I think they're all going to try to be a lot more efficient because capital is expensive, capital is hard to come by, and earning returns on capital is a struggle in an economy that's not growing.
And you look at the capex spend from both MTN and Vodacom, they're raking up a really, really high bill. And just talk to me about, you know, Vodacom's performance in other African countries. We've seen them really penetrating the market in Egypt and Tanzania.
So between Kenya, which is Safaricom, that's an associate, and Egypt, you probably have 40% of earnings, give or take, and that's quite significant. Tanzania has also done well, and Tanzania has done well on the back of the regulator becoming more friendly and more investment savvy and more willing to let the networks go out there and sell their wares. So Tanzania has shown massive growth over the past 2 years and seems to continue to doing that. Safaricom as well. Egypt benefited from a regulator as well that is very much in favor of the mobile players. When there's a big devaluation, allowed them to raise prices. I think they raised prices 3 times to match the devaluation, and that's underpinned the earnings. So in South Africa, on the other hand, South Africa has been slow, like we've been talking
Yeah.
about MTN. But when you add these Africa businesses, ex-SA, they're actually adding value, and you'll see that both Kenya and Egypt will pay dividends to the holding company here and support the dividend and free cash flow generation of the group. So generally, outside of Mozambique, those African operations have been value adding.
All right, let's leave it there. Roy, thanks so much for your time and sharing your insights with us. That was Roy Mutooni from Sanlam Investments.